When people talk about property hotspots, you often hear names like Townsville, Mackay, Rockhampton, and Gladstone being thrown around. But there's one regional city which does not get enough attention from the property investment community despite having strong fundamentals, good rental yields, and solid growth prospects ahead. I'm going to talk about a regional city in Western Australia today, which has some serious growth potential ahead, and why you should consider this as an investment choice if you have a budget of under $500,000. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now today I'm going to talk about this region which sits 5 hours north of Perth and has a population of around 40,000 people. This is the city of Geraldton, and in this video I'm going to break down why Geraldton is undervalued and why it has some good growth prospects ahead. I'm going to talk about the economy and the infrastructure projects. I'm going to talk about the market pressure in the Geraldton region, and finally I'm going to reveal a suburb in Geraldton where you can buy between 400 to 450,000, where you have good growth prospects ahead. So stick around till the end of the video. Now let's start off with the basics. Now Geraldton is a region which has all basic amenities and infrastructure for people to live and work there. It has a big port, which is Western Australia's second largest port, and that port contributes significantly to the economy of Geraldton. Now, when people talk about Western Australia, they always think that these are mining towns. But Geraldton isn't a mining town. Yes, mining does contribute significantly to its economy. In fact, it contributes 1.2 billion to its economy. However, as we can see from this data from ABS, there are other employers as well: healthcare and social assistance, retail trade, education and training, construction, accommodation and food services. So there are other employers in that Geraldton region. In terms of the unemployment rate, we see that the Greater Geraldton region, the unemployment is sitting at 3%, which implies a very tight job market. This means that the economy is doing well and there are plenty of jobs in that area. What I want to really get into is the value prospect in the Geraldton region. Now, I'm going to classify Geraldton as a hotspot market. So what it means to be a hotspot is that prices have been increasing rapidly over the past year. The demand is exceeding supply, and there's a lot of market pressure in that region. And the value prospect here is that it is probably one of the very few areas where you can still find houses around that 400,000 price point, where you have a significant population of around 40,000 people, and where property prices are rising rapidly. There are not many regions in the country that could give you this. So that's why Geraldton is one of those very few areas which gives you that affordable price point, yet gives you that solid growth ahead as well. On top of that, it gives you rental yields of about 5 to 5.5%, which is good for investors. Now, I want to compare Geraldton to the other hotspots around the country, right? So in this table, I've taken Townsville, Gladstone, Mackay, Cairns, Mount Gambier, Bunbury, and Geraldton, right? So I'm comparing the 1 year, 3 year, 5 year growth and the 10-year growth. So as you can see from here, in terms of the 1 year, 3 year and the 5 year growth, there isn't really much differences between Geraldton and the other hotspots. But when you look at the 10-year growth, the differences start emerging. Townsville's done 74%, Gladstone 73%, Mackay 46%, Cairns 69%, Mount Gambier 100%, Bunbury 75%, and Geraldton sitting only at 33%. So over the 10 years, it's only done 33%, which means that there's a lot of room for growth ahead in this market. The next thing I want to talk about is how similar Perth and Geraldton are in terms of their growth cycle. So this chart here between 96 till about now shows the growth rates of 6 different suburbs. So I've taken 3 from Geraldton, Mount Tarcoola, Wagga, and then I've taken 3 from Perth: Armadale, Gosnells and Rockingham. So as you can see here, the growth profiles is exactly the same for both, right? The boom between 2003 till about 2010, and then the price decline between 2015 and 2019, and both markets recovering from 2020 onwards. So similar growth patterns. If you have the confidence to invest in PERC, you can invest in Geraldton too. But then, even though the growth cycles are the same, there is a difference in the growth rates between PERC and Geraldton. So I'm going to take two very similar suburbs. I'm going to take Rockingham, which is a beachside suburb in the Perth region, and then I'm going to compare that with Mount Tarcoola, which is very close to the beach as well in the Geraldton region. So over that 1 year, Rockingham did 19%, Mount Tarcoola did 18.176%, which is very similar. 3 years, 57 and 31. 5 years, 94 and 76. And over 10 years, Rockingham did 60%, whereas Mount Tarcoola only did 32%. So even though the growth cycle is the same, Geraldton is lagging behind, and therefore to catch up with Perth, it has to have more growth coming up right over the next few years. And that's why Geraldton is an exciting prospect, because of that growth which is ahead. And even in terms of affordability, I'm going to compare some councils in Perth like Armadale, Rockingham and Gosnells, and compare that with Geraldton. So Armadale 51.4 years in terms of affordability, Rockingham 49 years, Gosnells 45 years, and Geraldton only 22.3 years, which means that residents in Armadale, Rockingham and Gosnells, their affordability is getting stretched, whereas in Geraldton, they are quite comfortable with the mortgage repayments, which means that there's more room for price growth. Now let's look at the interstate migration patterns. Now the data here shows that by state, right? This is by state, internal migration by state, and it shows that Geraldton has received the 5th largest internal migration in Western Australia. In fact, internal migration into Western Australia, net internal migration into Geraldton in particular, increased by 40% between September 23-24 and 22-23, which means that people are moving to Geraldton to take up jobs because of the affordability and the lifestyle that it offers. Now let's look at the market pressure in the Geraldton region. Here's the Stockholm market from SQM Research, and you can see the Stockholm market declining over time, and particularly between 23 and 25, you can see that sharp slope and the stock reducing rapidly here. Vacancy rates is sitting at 0.5%, implying a very tight rental market. In terms of the days on market, you're seeing that the days on market has been steadily reducing over the last couple of years, and now it's sitting around 50 days. Of course, it varies from suburb to suburb. Now let's look at the major infrastructure projects shaping the Geraldton region. The number one is the Geraldton Port Maximization Project, which is going to create lots of construction jobs and ongoing job opportunities. And the other one really is the one which will transform the Geraldton economy, and that's the Oakajee Strategic Industrial Area. So it's a 600-hectare greenfield area, and the focus here is going to be on renewable energy projects, especially green hydrogen. So billions are going to be spent on these projects, and these are going to create a lot of jobs into the future, and that's promising for the Geraldton property market ahead. In fact, a $20 million contract has already been awarded to build a road to give access to that area. Now, as promised, I'm going to talk about a suburb in the Geraldton region, which is promising. I'm taking the suburb of Wagga Keene, and here you find that the median income sits at $1,605 per week, which is a fairly healthy median income. And you can buy a 3-bedroom, 1-bathroom here between $400,000 to $450,000. Now, if you look at similar suburbs in Perth with similar median incomes like $1,500 to $1,700 per week, suburbs like Ridgewood, Clarkson, you could find that 3-bedroom, 1-bathrooms would be priced around that $600,000. So you can see the value prospect here in Geraldton. So you can find good quality, low-set brick homes at this price point, $400,000 to $450,000. Similar houses would sell anywhere between $500,000 to $550,000 in regional Queensland. Now let's look at the market pressure in Wagga Keene. Start off with the days on market. So the days on market has been steadily reducing and is now sitting at around 35 days. The market absorption rate has been picking up, and you can see since October 2023, it has been picking up really fast, and it's now sitting anywhere between 30 to 45%. So market absorption means the rate at which properties are selling divided by the total number of properties listed. And if the market absorption is increasing, it means that the activity is increasing and the market is starting to strongly pick up. And the vacancy rate here sits at 0.6%, so very tight vacancies. Now I'm just going to share a recent deal that I did for a client in Rograkin. So this is a 3-bed 1-bath home on an 851 meter square block of land, so big block of land. Got it for 415,000 and it rents out for anywhere between $450 to $500 per week. So that's it from me, guys. That's the summary of Geraldton. There is a lot of pressure in this market and there is potential ahead as well. I hope you found this useful. If you like more content like this, then please like and subscribe to my channel and I'll see you in my next video.